Hey everyone, in today's video, I'm going to be talking about why I sold my Topgolf Callaway stock, going through when I bought the stock, when I sold it very recently, and then just going through some information about the company as well, in terms of why I got into the stock in the first place and what my thoughts on the stock are moving forward. Before jumping into this, if you like this type of content, be sure to give this video a big thumbs up. It really does help with the YouTube algorithm. Also consider subscribing to the channel as well. Okay, so Topgolf Callaway Stock. For those of you who aren't overly familiar, this company owns Topgolf, obviously. They recently merged with them a couple years ago. They also own a lot of golf brands like Callaway, Odyssey, so on and so forth in their golf equipment unit. And then what you probably wouldn't have guessed is even though it's primarily a golf company, they also own a lot of apparel brands like Jack Wolfskin, Travis Matthews, which has been a bit of a growth driver for them historically speaking as well. So I'll just go back past 5 years. It's interesting. The stock, despite merging with Topgolf, COVID, like so many different puts and calls, but the company's essentially flat over the past 5 years. So it hasn't been a great stock overall, despite its run up to almost $40 at one point during the pandemic when Topgolf was really moving and had really strong sentiment. But this stock's been on my watch list for a while. I think I owned it once prior, and I kind of traded it more than owned it. It went up 10% super quick, and I just like moved out of my position because I didn't want to buy more up 10%. And it's funny because this time around something very similar happened. So just looking at the last 6 months here, Topgolf Callaway reported earnings early May, and the stock just cratered 20% right away, but then even went down closer to 25%. The day it went down in the low 17s, I bought some shares, and then when it went down further into the 16s, I bought some more. Overall, it was a very small position, only 50 shares, so under $1,000. But I was looking forward to hopefully building this position up into 200-300 shares potentially, and I just never got the opportunity to do that. Just looking at the financial information about the company here, it has about 200 million outstanding shares. So the value of the company is about $4 billion. And that is under 1 times revenue for this current year. So that was one of the more attractive elements. I thought it was trading from a revenue multiple very cheap. And even if they figured out how to get a 7, 8, 9% net income margin long term, I was going to be buying this stock if they got to like a 9%, 10% at like a 10, 11 times future earnings, even at these revenue levels. So super high level, thought the business was going to keep growing. Even if it didn't, if they stabilized their economics, I thought the stock was in a position where it was trading pretty cheap. But with that being said, their earnings right now are a bit all over the place. Their capex is really high as they build out their new Topgolf division. And the one thing that scared me the most about this company is their debt. So they keep saying they're cash flowing and they can fund their own growth. But then what I saw from last year to this year was a 30% increase in net debt from $2 billion to $2.6 billion. And for a company that's worth $4 billion and doing $4 billion in revenue and 600 million in EBITDA, having $2.6 billion of debt in an environment with high interest rates, I thought was a bit risky. So that was one of the red flags that made me feel a bit uneasy about going big into this stock. And then just looking here at net debt leverage. So even though EBITDA increased really nicely from 2022 to 2023, the debt's going up even faster as they build out Topgolf Callaway up to over 4 times. So the debt on this one's getting a bit high. Their earnings aren't stabilized, which makes this more of, at least for my risk tolerance, more of a speculative play versus a company that's cranking out earnings per share, paying dividends on a quarterly basis, something like that. Some other sentiment that I've seen in the news from some analyst reports is concern on the golf equipment business potentially starting to slow down here. So Topgolf, I think, is going to continue to grow as they open up new locations. Apparel side, they're doing some global expansion. It should be good. maybe soften a bit, but it still should be growing. Golf equipment is probably their most volatile wing of their company. So some concern on the golf equipment side, concern on the debt side, concern on just the message track around debt on if we're cash flow positive and we can fund our own growth, why are we increasing debt $600 million year over year for a company this size? It didn't really make sense to me, and that made me a bit uneasy. So looking at my sell here, you can see last week I sold my 50 shares for 1931, so just under $1,000. Looking at the chart here, I made like about 12-13%. My average price, I believe, was just over $17 between buying at 17.50 and closer to 16.50. So I didn't mind taking the gain of 11-12% overall from when I bought, especially since it was such a small position for me, under $1,000 in this account, and this account's almost $200,000. So overall, wasn't moving the needle at all. And as we got closer to $20, I felt less comfortable with this being the best place to park my money, especially with some of my other positions trending downwards. So the other thing is the reason that this company kind of jumped up 10% out of nowhere was all around the PGA Tour merging with the PIF and Live, and it just skyrocketed this stock. If I can just do a little check here, the stock was at like $18, immediately went up over 19. It touched $20 even on Friday. So I just thought that while conversations around golf and mainstream media, and maybe if that is something that'll grow the game, that could help Topgolf Callaway for sure. More people interested in golf, going out golfing, going to Topgolf, whatever. I thought that was like a pretty intangible driver to move the stock 10% in 2 days. So didn't want to really be buying into that. If anything, wanted to sell into it. So made my 12-13%. Not a lot of money overall, just about $100 or $120. So this one's still on my watch list if it goes back down. I just think, given the fact that I feel like there is some level of risk with the amount of debt they're taking on, with the volatility and the like macroeconomic exposure to like the golf equipment business specifically, and also Topgolf to a certain extent, obviously not a staple or something that people have to do. I just want to make sure I'm getting into this one at the right price. So if this one was to go back down to $17 or something like that, I may start nibbling back into it, trying to build up a bigger position, but I'm not dying to own this one, buying it into a rally. I'll just take the gain, move it to somewhere else in my portfolio, and wait for a better buy-in price. So I typically don't do that with my core stocks in my portfolio. They're really buy and hold. But for some of these more fringe positions that I haven't been able to build out yet, a bit more willing to just sell and take a gain, especially if it pops right after I started a nominal position in it. So hopefully that gives you some context on why I sold this stock. Let me know your thoughts about Topgolf Callaway if you have them in the comments. Also, if you like this type of content, be sure to give this video a big thumbs up. And if you haven't yet, would love if you subscribe to the channel. I'll see you guys in the next one.